All right. Before we jump into something new, over the weekend I see you guys have posted a lot of new stuff on the practice part of the page. You guys did some recaps. Any particular question or concept you guys want to run through? Since the question may or may not still be fresh. Team A, Team B, any one of you guys, if you guys have anything you want to go through with me. No? All good?
Hey Lucas, man, I got something. It was actually something Jay posted up. I just watched his follow-up video just before we got on here. Appreciate it, Jay. There was a one he did is Aussie CAD on December 13th.
Okay.
It's kind of interesting the way it reacted to the trap zone. Everything was great how he marked it out. I was just wondering, it reacted like twice to his trap zone and then made a higher high. It's just pretty interesting. It seemed like something I remember Naveen talking about, how to make a higher high you have to come back and test it as the opposite party again instead of just let me see, I think it was on December 13th. If I'm wrong on that, let me know, Jay.
This piece here.
Yeah, it was. Yep, it was. Yeah, I think it was this breakout and
Yeah, I took the buy around here.
Yeah, and it reacted perfect off of where you had taken the buy, and then it came back, I think, on this spike on the lower time frame on the precision, and then it went up, small pullback, and then made that higher high. It just was pretty interesting to me, knowing whether it's the first small test of that comes back that we should take, or should we be waiting for it to kind of turn around to take it. I don't know if that makes sense, but it was on the precision time frame.
Yeah,
it's real interesting.
We're gonna go. So I think you're asking if we should get in as it's going up or wait for this to get in, right?
Yeah, basically, because it tested it twice. It did come back right after it broke on its small trap on the lower time frame. It came back pretty quickly and tested, and then it went up to the recent high area, but came right back down to that trap area once again.
Okay,
that makes sense.
Yeah, that's pretty much what I will be trying to cover today.
Awesome.
Yeah, that's great. First off, so yeah, one of the homework was to look at prior trades. So Jay, you're saying you took this trade here?
I haven't taken a trade in a while, so I was just back testing, and I seen this as a nice setup.
Okay, so is this a trap per se?
The way I seen it was like a consolidation happening for some time. So once the buys broke through, it could be a good release.
So it's all based on the fact that it's a range then?
Yeah.
All right, so if this was smaller, let's just say if it's not a range, just few swings like that, is it still a trap?
It could be.
And why is that?
We just broke through all these sellers.
Yeah. So all these guys, they were all trying to sell, right? All this guy may still be around. All those sell attempt failed, got a kill of sorts, release. Yeah. Right. Just wanted to make sure you know.
Yep.
Okay. Yeah, as for which one to actually get in on, we're going to cover that today. right? So go ahead.
Yeah, Lucas. Well, I have a similar question, and it's the trade I took on British pound Canadian dollar back on the 24th of November last year.
All right.
24th of November last year. Yeah, so you see, I was trying to sell that thing after that huge range, and yeah, on the 5 minutes, it's also about testing as well, because this one it actually tested very deep. So I missed that one. That one I missed because I was not around, and then when it came back, I was trying to get in from there, but the way it came back, it was actually very deep. I was trying to take a trade from a little trap it created over there on the 5 minutes, and then it came back actually very deep. So I was my question is really the timing when do we get in, because it came. The little trap it created, it's more obvious on the 5 minutes. We cannot see from here, and it's instead of testing the lower end of the trap, it's actually testing the upper end of the trap. So in this case, do we wait? It bounce off the upside, and then when it come back, we sort of get confirmation. Okay, so this is going down. Then we get in, or we can just take the trade when it hits even the lower end of the trap. Then we just put the stop on top of the recent high.
Yeah. Yeah, keep this question in mind. We're gonna come back to this. So again,
Yeah.
sort of like similar situation. Yeah, those two pairs, we're gonna come back to it again by the end of today's lesson.
Yeah, thank you.
Sure. Okay, Maya will not be with us for a quick 10-15 minutes. All right, good question. See that you guys are clearly looking over older trades. Any other pairs? Anyone else have? Yeah, Williams, go ahead.
I just have a quick question regarding trap.
Yeah.
So I just want for clarity. So let's assume this is the last break, right?
Yep.
And it got taken out. So when we're looking at the trap, is it this last, attempted, or every seller that's within this from the guy that started it? So is everybody trapped there, or we just look at the last attempt?
Okay. So generally speaking, from the first few lessons, we are saying it's these guys, right? Your question, correct me if I'm wrong, is if this kills the entire move towards the upside. So are these guys trapped, or only these guys are trapped?
Yes.
Is that the question? Yep. So generally speaking, let's say we have a downtrend like that, steady downtrend, okay? Once we kill everyone, they are all trapped. Then at this kind of, when this kind of situation happens, you'll be expecting price to, you're not really expecting price to come all the way down towards this C price for release. Sometimes it's gonna stop here, it's gonna stop there, it's gonna stop there. The whole reason why, although it kills everyone, doesn't really mean that we want to buy here. It can react off there, but the chances of getting it to turn here and being right, you have a few chances. It can turn here, it can turn here, it can turn here. So the question then you have to ask yourself is, are you willing to take a chance to get in here and then try again here if the first one doesn't work out, the second one doesn't work out, and then you go for a third try around there. So that depends on how you want to trade it. Generally, how I would try to do is just use the concept of once I have this break, give me a deep enough pullback towards a good enough logical area for release. So in this case, it could be areas like this, or even this second area here. So at least, if I fail to do the buys here, if that becomes a loss, at least I know this has a higher chance of, being a winner. Does that make sense?
Oh yes, because I just want to have the, when I'm looking at my TTR trend, trap, and release, so I understand the trend. So I just want to know how to spot the trap. The trap is like when you take out the last guy that started it, then we form a trap. So within that trap, so that means like from the guy that started it all the way to the last attempt, they're all trapped when we take them out.
Yeah,
So
they're all trapped.
That's what I'm just trying to clarify.
Yeah, they're all trapped. Okay. So in this case, see how this push kills this guy, actually went towards the recent high as well. So the reason why there is a few possible area for it to react is because if we look at this on a higher time frames perspective, this could be a huge range, right? Huge range, and this just pierced through everything, making this sort of like a C type of trap where people would try and sell here. Hence it released from there. So the only time where you have stuff like this is when you see a huge push that's pretty much visible on the 240 or on the daily time frame.
Thank you.
Yeah, no worries. I think Ion, you had a question, right?
No, I don't have.
Oh, okay. I think I saw someone raise.
I had a question. I think you answered it, but maybe I can ask it anyway.
Sure.
You were talking when this push is very big, kills this. Oh, just a minute.
All right.
Yeah. When it kills a few traps on the way, so maybe we can see where it should bounce from and base it on maybe a big range or a lot of volume in this, maybe here or here, depends on where.
Yeah.
Can you look at it like this? Because when you talked about, okay, all this big range, I guess that's it. It should react from there.
Yeah.
Okay.
So the understanding is you just want to look left, right? When this thing breaks towards the upside, you just want to look left. Ideally speaking, this is a higher time frame move. So for a higher time frame, what is visible on the higher time frame? So most likely these are not. I mean, this is okay, but these here are not really visible. But this is for sure visible. This chunk here. So just then this is the part where we imagine someone's trying to sell and then they fail, so they release from here.
So you should always go to the bigger time frame to check when it's such a big move. So you know.
Yeah, you can. Generally speaking, you don't really need to. You can just look at it here.
It shows, It shows with volume or a big range or something like that.
Yeah. Just look at the left and see where people should sell.
Yeah, okay. Thanks.
Yep, no worries. Okay, any other question? It's a good one, this one. Right, Williams, all good on this one?
Yes.
Yep, it's a good question. Okay, so today we're gonna try and today, tomorrow, and Wednesday, we're going to try and do more educational stuff and then try to go into more live trading starting from Thursday going forward. So still keeping in mind everything we have learned so far, now we're just again adding another layer onto it. Today we are going more into the story part of things. Okay, so the way Naveen has taught us so far in how we trade, and it does show a lot of times on the charts, is the way market move is how we see this push. All right. Today we're going to talk more about refreshes and how primary, secondary, and cheese kind of go hand in hand. Okay. So let's say we have this kind of move. Okay. I'm going to just draw it out so that you guys are able to see it first. So primary is generally, say we're in a downtrend, and let's say we have a level. This again can be a release level or can just be a random SNR. All right. Generally speaking, the best time we want to trade any kind of a move is when we have a release zone. So let's just assume right now that this is a release zone on the higher time frame on a 60-minute. So when prices are pulling back, the first time it got towards that area, we're gonna do it's gonna make a move down, and that move down we call it a primary. Okay, so just primary first time to a level, it reacts. Right? Just keep in mind that primary sometimes does move, does move from a level that doesn't really make sense. So in those cases, we can't really trade them because we're not able to identify these levels, right? So we only know it's a primary after the fact. Okay, whatever the case is, now, and this is the part where you guys want to try and think about it. When primary goes down from this level here, let's say this is a release zone. Today's team A, right? Right. Yes. So when primary goes down from this release zone J, where do you think this primary is gonna stop? This move, where do you think it's gonna stop?
The buyer's SNR.
Why is it gonna stop there?
We have temporary buyers in the market, so they would hit it again.
Try that again. I understand what you're trying to say, but not really the answer I'm looking for.
Can you ask the question again?
Why would it stop there?
The sellers would be afraid of that area because it's a buyer's area.
All right. So I think maybe I'm not asking this good enough, but if you look at this picture from here going down.
Oh, I see.
Yeah.
So it would be a release area for the buys then, right?
Yeah. So the reason why it's gonna stop here, theoretically, it's because these guys, last guy who started, they sold. All right. If this is the last attempt, they got killed, and they should ideally try and release.
Yeah.
Right. So you guys will sometimes see a primary push that goes down, stops here, goes back up. If this move fails to make higher highs, it can crash like that. Okay. Now this is a proper refresh. How is it a refresh? Because the sell got taken out, temporarily become a buyer's market. Buyers try and fail, resuming the sells. Here, this is the secondary. Right? So once we have a secondary, let's say we are right here. What's above us right now? Aeon, what do you think?
What's above us? It's a trap.
It's a trap, right? So whose trap and where a release would happen?
So let's change the color. Okay, here we have the trap.
Yep.
Yeah.
Yep.
And the price will try to come here and then blast.
Yeah, because these guys were the last guys who tried to buy, and they released from here.
Yes, and it was taken. Yeah.
Yeah. All right. So, in the beginning of last week, we saw a lot of traps that were counter trend, right? And all of those pretty much were stuff like this piece here. So, okay, let me show you guys. So we have a few traps here, a few release to work off. Okay, the first release would be here. I'll just mark that number 1. Number 2 would be here. And then the third one, number 3, would be here. And then this piece is generally what we call it on. This is the cheese mode kind of thing, the stuff we learn in MPA. All right, so out of these 3 traps, it looks like a traffic light right now. Out of all these 3 traps, remember how I said, you can use this as a systematic approach. So out of these 3 traps, the best kind of trap would be this one here. Because this is confirming that we have a refresh of a trend, right? Downtrend, refresh of a trend, get everyone stuck on the buy side, and then resume. This push here, this primary, is pretty decent as well. It all depends on where we are when markets are opening. So sometimes we'll see we are right here. Sometimes we'll see we are right here. Okay, and these kind of moves generally only happens when markets are open. All right. All right. Yeah, does that make sense?
I am a little bit lost. So primary comes from the first trap, from the scenario on 60. This is on 5, right?
Okay, pretend all of this is just on one time frame. Just one time frame. This is another level on the left. And this is all just, again, all 60-minute time frame. This is how generally a market moves. We're not going to lower time frame yet.
I'm a little bit lost about 1, 2, and 3. 1, I understand, is primary, but what about 3? It's the blast or the no? Okay, and what about the 2? The 2 is the trap after the primary.
They are all traps.
Mm-hmm.
Right? They're all traps. They're all traps and release. Okay, here I'm not drawing it out. Okay, let's just assume that it's a huge range. All right, we are gonna expect some kind of release. All right, so that's why we have a move from that area. So this is a release that we have learned from the first 2 lessons. Primary push. All these guys below, with last guy who started, got killed. Is that a trap and a release?
Yes.
Yep. So that's a trap as well, right? Number 2, it's a release from the bottom as well.
Okay.
Yeah. When we push down like that, these guys got killed, right? Yep. So when he got killed, we also have a release once more.
Understood. Thank you.
Yeah.
So 2 comes out from the trap from the last push down from here, the trap which is here.
Yes.
Mm-hmm. Thanks.
Yep. So a 2 happens because someone's trapped below. That's why when we're doing a counter trend trap release kind of thing, such as this one, such as number 2, Sometimes it's going to be extremely risky because we're not sure how far this release can go because it's so counter trend. Everyone following along so far? Yep, Maya, go ahead.
Hi, Lucas. Am I correct if I say that your first trap is on your higher time frame and your second one is on your lower time frame for your entry?
Second one, sometimes you see the first one from a higher time frame, but there are also many times where the primary can come from the same 60-minute release zone.
Okay.
Yep. And then the second one, they're all based on the 60. You can just look at it as all based on 60. We're going to go into a live example, so don't worry about that.
Okay.
Yeah. So this is all just the part where I'm trying to explain how market move from one level to another level. They're all levels, right? So this is a level, this is a level, right? When we learn technical analysis, we're always learning one support is broken, it's going to turn into resistance to sell, that kind of thing. So it's all based on that kind of logic. It's just that when this support is broken towards the upside, when it pulls back, it's not automatically a good support to buy on the flip side. So we're trying to identify which ones are the ones that we can hold a little bit longer, which ones we can't really hold that long. Right? So Maya, so let's say if we are doing a primary sell, okay, let's say out of these 1, 2, and 3, which one has the furthest chance of traveling?
You're asking me?
Yeah.
Yeah, obviously the first one.
No, which one has the furthest chance of traveling far and having no one stopping him?
Your first entry.
The primary?
Yeah, your primary entry.
Okay. So if we sell a primary, it's not really gonna go all the way down. The reason for that is because someone's trapped here, right?
Okay.
Right? So because someone's trapped here, when this guy got killed, they are gonna try and buy and release. Does that make sense?
It does, yeah.
Okay. So let me ask you again. Out of 1, 2, and 3, which one has the furthest chance of traveling?
I suppose 3.
And 3 because?
Because it can make a lower low.
Yeah. Why can it make a lower low?
Because it took out all the other landmines on the left.
Yeah.
All the traps.
Yeah. It's not so much about landmines at this point. It's more about which one, first, second, and third, which one actually has a trap or release zone ahead of him where it could react. So out of 1, 2, and 3, 1, it has a release zone right below the primary area, this piece here, that could release. Right? These guys. Right? 2, we don't really know where it can travel up to if there's a huge release zone above us. And the second thing is it's counter trend. So we're not sure if the trend has actually turned around at this point, number 2. Okay, so the first one is because there is a release ahead. Okay, second one is because it's a little bit counter trend and plus the fact that it could be a release zone here. If there wasn't a release zone, then you run the risk of run the risk of taking a counter trend trade, which we do not know has actually turned into, an uptrend at this point. Right? Number 3, it only has technical levels such as SNRs. That's all. It doesn't really have a release zone, or it's not really counter trending, that kind of stuff. It's all just minor SNRs where it could hold price, but if the overall read is right, it should make lower low. So this is clear. Okay. Does that make sense, Maya?
Yes, it does. Thanks, Lucas.
Yeah. Casey, you have a question?
Yeah, I'm sure probably we're going to answer it later, but so the 1, 2, and 3s are from release zones. You have the primary, and then it bounces on number 2 for the buyers. And then the number 3 sell would be the release. I noticed the secondary where you have the S, there's really no trap or anything. Is that just kind of a fading if we were to try to take secondary sales
Okay.
on this? Or is that too early?
How do you think you can actually take a secondary? Just based on what we have here, what would your answer be to trade a secondary? How would you trade it?
Just fade the momentum, kind of rubber band man. If he starts to roll over, and maybe on a lower time frame, there could be a small trap on the primary.
Yeah, right. So the way we're gonna go into this is sometimes secondary. The way we trade secondary is if this is our 60-minute time frame, we go up. If there's a small little trap here on the 5-minute, all right, you take that level out, extend the level out, and then you attempt your secondary from there. You can do that. Not you can, that's what you should do, sorry.
And that's pretty much what you've been showing us. So that's kind of what we're being taught already, technically, right? We're not even being taught the primary bounce. We're pretty much.
Sometimes we actually do primary. So it all depends. Okay, let's say we have a level here. Let's say I'm looking at just this last piece here, right? If this is the 5-minute, it all depends on how this thing goes. Say we have a kill.
That's right.
Right?
Okay.
We pull back. Say this point. Okay, this point is, let's say that point is this level, right here.
Mm-hmm.
We will see price. If you do take this primary, right, it's gonna try and go down, get towards this area here, whereas someone else thinking that it could be a counter trend will attempt to buy.
Gotcha.
So then from there, the same area again, you take a release. If volume, everything is setting up, blah, 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 that kind of thing.
Okay, yeah, because technically we'd be on the big scheme of things on your blue chart. That primary would be right here, that little trap area.
Yeah.
This would be the same as that up there. Okay.
Yeah.
Okay, I see it now.
Yeah.
Okay.
So the next question is if if this line, let's say, sorry about doing all this drawing here, but let's just say if this line is a little bit lower, say here, if it's there and it starts pulling back, do you think when you sell this piece, it's a secondary or a primary? Casey, what do you think? If you sell this piece here?
That would depend on that first push down. we never, have we taken out? So I guess that would all depend on, did we really take out this guy, or is this all still the same down move? Is that kind of where so I mean, if we took out on the way back up, took out that guy who started, this would be a secondary, correct? But if we didn't, let's say we just went from here, then it would still technically be the primary.
Yeah, I understand why you're saying that. But here's the thing where it's important. The reason I'll go into why that this understanding what piece this is important in a bit. But for now, just understand that when a primary goes, again, in an ideal world, it should try and get price to these guys.
Test that last trap. Okay.
Yeah. So we only really get a secondary after the primary goes back to the buyer's area where it can release here, which is here. So if that fails, then that is your secondary.
Gotcha. So it could just hang out in that top there and never really test that for quite a while sometimes, and that could technically still be the primary.
Yeah, it can.
Okay. Perfect.
So the reason why that's important is because, sometimes when we trade secondary, we have a little bit more conviction that it's gonna break this zone. So that's why it's important to know this piece is not a secondary, because if you're under the impression that this is your primary and this is your secondary coming in, and you're trying to hold on too long, this thing might still continue to push up further. So the whole idea is, remember how I always say, get a trade in from one trap to another trap, one level to another level. So this is your 60-minute level, say this piece here, then get it down to this piece, and then reassess what it's gonna do. So this piece comes all the way back down, reassess what it's gonna do, and then this piece.
Yeah, that little piece right there would just that would help. A little bit of knowledge right there helps a lot.
Great. Yeah, we're gonna look at more live charts. Hope that makes sense. Yes, I saw a lot of hands raising up just now, I think. Anyone have any question?
I had a question, but I think you answered it. It wasn't a question, it was more to confirm what I thought I learned here.
Yeah, sure.
I'm talking about when you say primary. Just a minute. When you say primary, isn't it what we've learned? You're talking about if you take this is a release area, and you come to here and you see a good volume, and what you do is you take it, you have volume behind you, and you're gonna see if you have behind in front volume in front of you. You just look at that and you see where you can stop.
Yeah.
If you have a lot of volume here, that means a secondary push will come, and then you'll see, okay, it's still a volume down here, or it's less volume, and that now I have volume here behind me again, it's increasing, then you take the secondary also. So
Yep.
What we've learned is the primary
Yep.
discussion.
Yep.
Okay, thanks.
A better way of saying it is what we have learned so far is learning to trade off levels like this. To trade off levels like this. That's what we have learned so far. One extra thing I'm trying to teach today is when does those level not work so well, and when does those level work better. So this level doesn't work that well. This level works the best. And then here it's okay as well. But here, I expect that it will stop some point in this zone because these guys were trapped.
But can't you gauge the volume here? If you see that this level is has lot less volume and all that, then maybe you can hold the trade. No, the primary is always that you take that level. That's it.
Yeah.
Okay.
Yeah. Okay, that's a good question. Hang on to that. We'll come back to this. Eric. Before that, sorry.
Yes.
Before that, Laila, you have any other question?
No, thank you, Lucas.
Okay. Yeah, Eric, go ahead.
Yeah, my question is that when you were trying to sell, in this case, the secondary, but really the buyer is still alive. So my sort of, I think my thought behind this is that we really got to monitor the last piece very carefully, just to making sure there's no active buying, and then we can get in. Because that one is more kind of like a, I don't know, it's sort of dangerous because we're using a trap that is not performing that well, and then there's always a risk that buyers going to push further.
Yep. We're selling secondary is basically we're anticipating all these guys that are trying to release to fail, right? For collapse. Yeah, that's really important. So the only way to do that safely is by using volume. That's all you can do.
Right.
So in the ideal world, the primary is gonna come in with super high volume.
Yeah.
So say primary is here. Okay. It's gonna come in with super high volume. And then this kill right here.
Yeah.
Ideally, again, should be low volume. And then as it pulls back, again, low volume. And then as it gets towards the top here, you see high volume.
Yeah. And then it confirms.
Yeah.
Okay, thank you.
Yep. So secondary generally is just a little bit trickier. It's not too tricky, but primary and obviously the first release and the third release, this one, these are the easiest one to trade, the safest one as well.
Yeah. Okay.
Yep, Ian.
You talk about the primary should travel from the level up to the level down on the pullback. So if we have here the level and we have the pullback, let's say this, okay, then this is the primary, and if it does not travel from here to here, what we should do with this?
I'll generally try and stand aside if I'm not sure, if it did travel, but it didn't really travel back to the, let's say a release zone on the bottom, then I'm not sure what this is. Could this still be part of the primary, but on a higher time frame? All that kind of stuff. So,
but what about the trade? Let's say we take here the trade.
You have to manage it. You have to manage it on the way down. And if it does start to pull back like that, then you don't want to be in it. Because this one ideally should come towards your next zone.
Okay, thank you.
Yep. Okay, any other question?
I just want to ask, so what makes this the primary? Do we need to look on the left side to determine that?
If you have a level on the left side, yeah, it's going to be very easy to identify it as a primary. If you do not really have a level on the left, it's going to be difficult to know if it's a primary or not. So if it's hard for you to know, sometimes it's just a random level, then all you can do is just wait for either a secondary or the safest one, this third one here.
Okay, thank you.
Yep.
Would you still take the secondary if you had volume right here?
I'll try not to, unless the volume on the secondary at the top here is extremely high.
All right.
Yeah. And this is extremely high.
Okay.
Right. So the reason why third one is the best one is because not only have we made a trap and a release, this level here, this yellow level here, but we also would have all the volume on these guys, all the volumes got transferred to the downside. So it's not just, the price action that looks good, it's also the volume analysis that's supporting how things are being transferred to the sell side. Right? Yep, Laila.
How do you know when to give up this primary move down? Is it because do you gauge it on the 1 minute if we are on the 5 to see? Because I'm having trouble to know when to scratch.
Okay.
When do I know that it won't go down to the level?
We're gonna get into that. So generally speaking, if you're in a primary, right?
Yeah.
Again, use logic here again. Primary means, again, in the ideal world, we would need
volume and everything and all that.
Yep, and a release zone, right?
Yes.
So when we see price coming back to a release zone, the idea is someone's trapped there and they want to get their money out, right? So if they are really looking to push and get out at break even, this thing is gonna travel quick, right?
Yeah.
That's why. Okay, let me see how I can answer the question. So if you do trade a primary, okay, let's say on the 5 minute you get in on a pullback, something like that.
Yeah.
It should go fast, so you can, as soon as it makes new low, new swings towards the downside, you can really quickly move your stops back half or even break even. The reason why it shouldn't go, because it's a trap and someone have to release, it shouldn't go slow. If it goes slow, it just means someone's not really trying to release. Hence, or it could just mean that the level you're using is just wrong. That's why I was saying before, it's best to trade a primary when the level is clear. Then it's easier for you to know how you can manage the trade. Because if the level is clear, it should bounce fairly quickly and fairly hard like this.
Yeah, but I'm thinking maybe the level is clear, but maybe it wants to go 1 pip or 2 pips higher and then go down or something like that. Maybe it's not like maybe it's not here it's gonna go, maybe it's gonna go just a little bit more. So when you come down to here and you notice, okay, maybe you have your stops a little bit higher, so you would be safe anyway. So
yeah, so on the 5 minute you're going to do the same thing, right? Marking where the guy who started is. So let's say this is your guy who started, and when he got killed, this whole zone is your release. So you're not trying to sell here. You're trying to sell here.
The third move on the precision time frame.
Yeah.
Yes.
Yeah. Remember last Friday, we were saying on the 5 minute we're doing the exact same thing. So this is the exact same thing. Getting a kill, and then your stop should just be here. If it goes up again, then the setup is incorrect. Then maybe it's trying to do a higher primary. If it's doing a higher primary, does that mean that the level I'm using is wrong, or is the level higher? Then that's another set of questions.
Okay. So this is important when you take the primary that you on your 5, you're gonna wait for it to kill the last move, and then on the 3 you're gonna take it when it's confirmed.
Yeah.
Okay.
No, on all these release zone, you're doing the same thing on the 5.
Yeah.
Here, you're all doing the same thing on the 5.
Okay, thanks.
All right. Right. Any other question? Yeah, keep them coming. It's really good. Ross, any questions?
Not for me. The answers and questions are really helpful.
Okay. Dennis, any question? Yeah, Casey, you were saying earlier?
No, I was just going to comment that this is going to be a good video. There's a lot of really good questions coming out on this one.
Yeah.
Kudos to everybody.
All right. Yep, it's good. It's good. Now I'm gonna go over again why number 2 sometimes could be risky. So assuming that we have the same kind of release zone on the left here. So let me just draw it out. Like that. Say like that. Say there's a level here. Okay. Let's say we have everyone understand why here would release, right? Yeah. Okay. And then here we are assuming that there's a area here, level on the left that could release. Okay. Now remember how we were talking about the 3 types of traps that we see in the market? Sometimes we'll see type A, right? Type A is type A, right? Even sometimes me and got labeling wrong. And then what else do we have? We have type B, right? And then we have type C, which is the one that kills the entire thing. Right? So in a counter trend kind of setup, when we are trying to do the buy here, we have the risk of running into all these types of situations where the release could just fail, right? So if we do a buy here in a counter trend, there could be a situation where this thing can just easily turn around, becoming a type C, where the buy doesn't work at all. Now, do you guys understand why now type C can retest to that area and release? Because at one point, we were thinking this area is going to release. Exactly like how we learned from the first week. Right? And then again, we will also have times where we get a pullback towards the same area again, trying to do the buys around here. And then all it does is this. Then we're gonna just be stuck inside this small little range, which is gonna resume as a type B kind of thing.
Lucas, I can't see anything. It's too much to the right.
Oh, okay, sorry. Let me just draw it here. From here to here, everyone should be okay? Is that okay for you, Lila?
Yes, thanks.
Okay. So I was just saying, you understand this is a release because this guy got killed. This is the last attempt. Because it's a counter trend, there will be times where it can just do this, right? The type B that we have learned from the first few lessons. And then when we do the buys here, we will be stuck in between, going in profit for a little bit and then going back in loss, going back in profit and then going back in drawdown and then stopping out. And then this zone becomes a huge release. So that's why in counter trend, sometimes it's tricky to do number 2. Because we won't know what's going to happen just because we are going against the trend. Does that make sense? You'll see how we are using layering everything with what we've learned so far. So Lila, your question of earlier, you were saying if you sell the primary, if there's volume and looks very good, can you just hold on to it if there's no volume below? The thing is, if we do sell and hold on, we won't know if this might happen. So if there's no volume on the guy who started, we could see price going down and then just chop around, but we won't know how long it's going to chop around. And then it might crash.
So it's best to go out of the position and try again.
Yeah.
Yeah.
Okay. Yeah.
Yes.
Okay. Yeah, sometimes you see doing a primary and then this thing just collapse like that. So that's fine too.
Okay, but you would go out anyway.
Yeah. The way I trade is I have a set take profit in and I'll just get out. I know some prop traders, they don't have a set take profit in. Again, that all depends on you. Once you understand the logic, you can do whatever kind of management you want. All right, any questions?
Yes. Can we anticipate in a way what type of trap will we have after primary? After we take the primary, in order to take the secondary, we need the type of trap. Can we anticipate it with volume or I don't know, correlation?
It's hard to know. It's hard to know exactly after taking the primary what is gonna happen here. I wouldn't know. Yeah.
So it's better to take the primary and then the lunch, the 3.
Yeah.
Primary is 1 and the 3, which is clear. It's on.
It's clear, yeah. Yep. In this case, right? So let me do this. If I erase everything. Okay. So we have again the few types of traps, right? So let me everyone just assume it's a pullback. So the first one is type A, right? And then we have this one. And then we have this one, like that. So in this case, this is primary, the first time going down, and then it should stop at a release zone. If the release zone fails to launch, secondary will come in. Here, pretty much the same logic, right? Just that this primary comes down very, very hard, right? It almost seems like just based on price action, both buyers and sellers are looking to buy or sell, right? Hence forming a range afterwards. They're just fighting it out. In this case, right, your secondary would be these guys. And it's going to be hard to time which exact secondary it could be. Is it here? Is it here? Is it here? Okay, the only thing that one can do in situations like this is just to make sure that if we do see setup like this, got to make sure to get price in as high as possible. If there's no entry, then we try not to trade the secondary.
Secondary is trade number 2, right?
Yeah, yeah.
Which is counter trend.
Sort of, yeah.
So it should be taken from bottom to top.
Bottom to top? Which one?
Yeah, from here. Or not.
To do the buys?
So if the trend is down.
Okay. No. I'm assuming that we're looking at this. And we're pulling back.
Okay.
Yeah.
Yeah.
Yeah. So we're pulling back, and where we want to look for our setup. In this case, if it's a push, pullback, push, kills, because it's lopsided, just one push down is your primary. In this case, you sometimes see secondary coming back, and it's going to be visible on your 60-minute. Because the primary itself made a kill on the 60-minute alone. Does that make sense? So this here, we can't really see the kill on the 60-minute yet. We only have the kill after secondary, and then this is like the cheese mode. Here, same thing. We can't really see the kill on the 60-minute, not until afterwards where it's a cheese. But in a type C kind of trap, sometimes we'll see on the 60-minute, the guy who started being taken out at the level of a huge downtrend. And then, the secondary is also visible on the 60-minute. What does this mean to us? Nothing really changed a lot, because at the end of the day, we're still trying to take it from a release zone to a recent low or another release zone at the bottom. Okay. I'm just putting labels on the stuff we have learned so far. Does that make sense? Any questions?
For the Lucas, for the C setup, sorry, I'm trying to for that setup.
Yep.
Where do we have the cheese after that?
Yeah, it might just be this. Yeah.
Yeah. Okay.
Yep.
Thank you.
So it's almost like just comparing all the types. It's almost like if this is like start of the pullback towards the upside, the launch for this trade is here to here. But just in C, maybe you have one big chunk to make money off, and then another big chunk afterwards, the cheese to make money on. So it sort of opens the door earlier for you to get in with safer style of trading, if that makes sense. Yep. I think before Ross, Casey, you had your hand raised, right?
Yeah, it's fine. I was just gonna say, ask about like your stop loss. This is why, that's why we do a logical stop loss above this on this type A, because if it goes above this, then it just means this guy could just keep taking it further up. And the same with the D, right? Our stop should be just above this, because this guy could potentially, if he just takes it up, then we don't want to be in it anyways. Correct.
If these are all your 60-minute, and it is showing it as a 60, you're fading the pullback on the 5 on this piece.
Oh, okay, that's right. So our stops would actually be even tighter.
Yeah, it should be here, right when the uptrend on the 5-minute has turned.
Gotcha.
Just here, yeah, there.
Okay. Okay. Perfect.
Same goes for, all the other ones here, here, or here.
Do you ever see this B setup where it kind of just bounces here? Do you ever see it kind of do a little that and then go, or?
Yeah.
Yeah. Okay.
Yeah, it does that a lot. Yep, Ross.
I think you've answered my question, but trades 1, 2, and 3 are all short or all long. All of them are exactly the same direction, but the secondary, you're trying to anticipate the point where it will go long or short. But all three, primary, secondary, and the cheese, are all in the same direction. The trades to try and take.
Yeah.
Is that correct?
Yeah.
Yep. Thank you.
Yeah. So like primary, as in like the first time it went to a level and turned. Secondary, so like second time it got to a level and turned, that kind of thing. Sometimes, and I hate those times, it's when secondary actually try to probe the highs of primary. Sometimes you guys will see that as well. That usually happens when this pullback, market is dead, no one's around, and it's all just waiting for market to open, and market only opens around here and then crash. Sometimes we'll see that too. It's hard to get in on those because then I'm not sure if my release zone on 5 or on this part are actually holding markets or not. So yeah, just showing you guys some of the stuff that might happen. Okay, any other question?
So basically, we're just naming the types of traps. Like the first push going to be primary, while the second one is going to be secondary.
Yeah.
Okay.
Yeah. And which, again, the whole reason why we're talking about this lesson is because we want to know which one is the safer one to trade. Yeah. All right. Let's do one more example on the flip side, and then let's go into live market. Okay, downtrend. Oh, we were in a downtrend. Uptrend. This is what we've seen so far last week, right? Uptrend, and then we sort of have a kill of the last guy who started on the 60-minute in an uptrend. This push here, this is your primary. Okay, on your big uptrend. Sometimes you see the primary is coming from a level that doesn't really make sense. Let's say around these zones here, we do not have a release zone. It might still come in. Okay, and then this could be a secondary, a sell that was attempted from these release zone here. Let's say there's a release zone. I know this is a C type and it should be here, but let's just assume it is where it is. Push down. Once it goes up, that's your cheese to resume. Ideally speaking, you would want to see a guy who started getting killed here. Right? Yeah, Casey?
So this is what we were looking at earlier in the week that quite a few people posted up, that it was going up, and then we were looking to take that smaller trap. We were looking to take this as the first trap for a sell, but it just never worked, right? And this is why. Okay.
Yeah.
That's making a lot of sense now. Okay, perfect.
Yeah. They are both traps and releases, but these ones work much better. Just because of this.
To resume. It's
Yeah.
just a refresh. Awesome. Good stuff.
Yeah. So tomorrow we'll try and look for when does primary secondary actually happens. Yeah, it will make more sense when we go into the charts later. But knowing when the primary and secondary happens is important also. Right now we're just saying, it's stating the fact that when primary actually happens, but you know, sometimes when we see stuff like this, if it's all still here, like still within this guy who started, you guys should be able to know the answer. If it's still within the guy who started, do we have a primary and secondary?
No.
Right?
No.
No. If we do not have, if it's still within the same guy who started, we do not have primary and secondary. The reason for that is because here, this is not a trap, right? Because we're looking at the same time frame. On the same time frame, the guy who started the buys are still intact. No sells have come in yet. All right. Okay. Let's take 5, as Laila said. Come back to this in a bit.
Thank you.
No worries.
Lucas, just a simple question.
Yep.
Will all these recordings will be loaded to our library afterwards, eh?
It's only gonna be in the Unicorn program part.
Yeah, but I mean, with all our other courses, will there be a section for our Unicorn program, and will the recordings be in there?
I don't think so. I think the management will take them down after a week after the program ends.
Okay.
Yeah. All right, everyone back. Yep. Yeah. So we're gonna look at a few examples of some primary, secondary. I'm gonna show you guys some the easiest, the classic kind of setup, and then as you guys get more familiar, you guys will see the more difficult ones. So in today's market, there is a few that looks like that. So for example, we have, let's say, euro yen. Okay. Overall 60-minute, again, buyer's territory. Right? Got taken out. This guy that got taken out, we pull back towards the same area again, try to sell. Do this again. Use this here. Okay. He got taken out. Temporarily, we are in a seller's market. Right? Seller's market pulls back towards some sort of a release. Say if this is a C kind of trap, pulls back towards that same area, push down. Right? It pushes down. Just take note of how the volume looks like here. Pushes down, fails to make lower low, and then from there, it just struggle around this whole zone here and then resolve up. And then now it's at this point. So in this whole picture here, Jay, can you try and mark out where a primary and secondary and where a cheese is? Based on this setup.
Sure. So this first push up would be the primary. It's the first bounce off this area. And then when it comes up to the release, the sellers hit it down. So now we have a secondary. And then when it breaches this entire area, we have a cheese.
Yep. So this one is pretty easy, right? This primary here, we know it cannot just blast to the upside. Sometimes it does. But in this case, it follows the logic that we have been learning so far. These guys who are trying to look for their break even tries to go down. If this push fails to make lower low, say in this case the secondary fails to go down lower, goes up. And then here you get your release cheese. So without even knowing the primary, secondary kind of terminology, we should have a fair, good understanding that if this is the guy who started, I know it's a bit small, but let's just say he is the guy who started. He got killed. These are your release zone anyway to try and look for a buy. You put that together with your volume at the bottom here. It's all tell you that you have volume behind you, which can try and resume the uptrend.
So if this guy wasn't here and it was just all red candles, would you still consider that a cheese or no?
Yeah, so that's the thing. If we do not consider him as, the last guy who started, if it's just one push down, you would probably come to the same conclusion that this all could just be more or less of a range. And the fact that you have super high volume from here.
Makes sense, yeah.
Yep. So sometimes when you take a trade, not sometimes, try and make it a habit to do it all the time. When you take a trade, just make sure that it is still a level, it still has a release zone potential, and it has volume. So if you get your terminology of a primary, secondary cheese incorrect, right? At least the main focus is still there, where it should bounce off logical level. Does that make sense?
Mm.
It's the same as how if you were to take a buy from here, which I know it's hard. But let's say if you did take a buy from there, you would think ahead and try and get out around the next area. And in this case would be, stuff like this release zone up here. So even without knowing what primary and secondary is. Yeah.
Yep.
All right, let's look at something a little bit simpler. Watch this trade, reassess it. The reason why I'm not too keen on it is because, we've been going on for a very long time. Where is this? Okay. In this case, right here, Maya, in this downtrend, when we start pulling back, which one would be the primary, secondary, and which one would be sort of like the cheese area?
My annotation tool. Okay, this is the last guy that actually got trapped.
Yep.
So I'll say that this will be the primary.
Yep.
This is secondary.
Yep.
It will continue to the downside.
Yep. That would be your cheese,
Yes.
right? So this is the classic one. Although it's hard to, it's not that hard to see. It's the guy who started, sort of like the last attempt that actually got, killed here. Buys around this zone is extremely risky because we're not sure what type of trap it's going to create. In this case, it traveled a little bit, crash. So your primary, if for whatever reason we do take the sell here, it should stop around this zone here. If we are unable to identify a level to use, in this case it's hard because I'm not sure if we have tested it so many times. Then we just stand aside, don't take the buy, don't take the sell, wait for this setup. Yeah.
Cool. Can we also say, is your primary and secondary basically like a set 1 and set 2?
I think set 1 and set 2 is this set 1 and then set 2. If I'm not mistaken, set 1 and set 2. I don't use set 1 and set 2 that often in my trading, so I may be wrong. But the way I understand it is if a set comes in, you have a push down like that, all right, still within the same guy, and then a new set comes in, takes longer, right, because all these guys are trapped. They would want to try to do the buys, and the set 2 fails, goes like that. Something like this. Yeah, which is, it's not super important right now. Okay. Now, Williams, let's say, right, that we are trying to take a secondary sell here. All right, how would we trade the secondary sell? Are we able to look for a release zone on this time frame?
So If I check with the volume, this one goes up. See, it doesn't have much of a volume. Then we see the next volume is not as as big as the previous ones. Then we have the second volume still at the top. So I believe it won't go that much far, but I could still take the trade.
Yeah.
Based on the volume.
Yeah. Based on the volume, trying to sell something like this, could be risky, right? Because first thing is you have volume here. You don't really have much volume here, right? And the other thing is you have a huge ton of level, right? Huge ton of volume here. So it becomes very risky to try to sell this. Okay, but let's see. If we're not looking at volume for now, how will we sell a secondary? I've sort of gave the answer away.
I would go with this level because when it breached downside, I know it didn't quite take out these.
Yeah.
But they come back with much level with struggling coming back up, so I could still look for a sell there.
Yeah, this would be the safest one.
Right.
But how would you sell this? Based on technical analysis.
I'll just say when it returns back to the last try over here, because the breach.
Okay, so here's how you would want to do it. So, this is primary, right? Everyone understood this piece so far? This is primary push. Primary cannot go far because someone on the opposite side is still trying to attempt their release. Right? Everyone understood this piece?
Yeah.
How this would end and when it would end, the only way on this particular chart to find out would be, we do not have a release zone on top, right? On this time frame, we do not have this. But if this is truly a primary, we can actually try and see if where a secondary could end on the 5. Let's go down to the 5. Okay, let me zoom out a bit just so you guys see. So again, this was the primary push from the upside going back down. From this area here, someone's going to try and release, right? Which they did afterwards. Okay. Now, Eon, before we start pulling back, is there a trap or release zone on the 5-minute before we start pulling back here?
We can consider here a trap. So the last guy who started it could be here. And from here up, it's a trap. More precisely here.
Yeah.
Okay.
More precisely.
And we can monitor this zone.
Yeah. Yeah. So that zone would be where primary comes in. All right. This buy here is the one that I'm always saying could be really risky because we have so much counter trending. Look at how bad this trap works. Right? Although we do have volume that becomes buy here. Once this guy got killed, this buy is very, very weak. Comes towards that release zone here, the one Eon you drew, and then start turning. It's when it starts turning and taking out the last guy who started on their way up that a secondary might just begin to come in around here. Okay, so in this case, now we're doing a little bit of inception kind of thing here. Now in this case, this is where you're seeing where your counter trend would die. So the counter trend may die around areas like this. In the ideal world, we would want to try to sell as high as we can around areas like this. In this case, if this is the guy who's still alive, then and there's no volume there, it's hard to sell. But if there is volume up here, and the guy who started, let's say, is around here, then got killed, our sell should try to be attempted around that zone, pushing down, and then see if it can be killed to push down or not. All right. In this case, what actually happened is last guy goes up, stalls as a B type, kill. Here's where it gets tricky because it came right back down towards the same release zone on the left. React again, squeeze really hard into the trap, and then only it goes back down. Why that is it could be because there's high volume here or high volume on the left, which makes things a lot more trickier to do the secondary around zones like this. Okay, but the name of the game is the same. We're still pretty much doing the same thing, identifying where a release is, which is here, then trying to get as high as we can to do the secondary. Just sometimes we have different scenarios.
So when we enter here, we should see something like a V formation and the retest here. So here could be the enter, here the stop loss, and here the take profit.
Something like that, yeah. But in this case, we're still looking for the last guy being killed, right? Like
yes, it is killed here. Or something
no.
like this.
No, that's not. That's not.
Okay.
No. Yep.
So to do the secondary, we have to go a lower time frame, right?
No, you just stick to the 5 because
we have to go to the trading time frame.
Oh yeah.
Okay.
Yep, Eric, go ahead.
Yeah, I think you just said the inception. I'm seeing this like a setup within the setup. So for the secondary, just get my annotation here, right? So we also have the similar thing. We are trying to basically we're trying to sell a trap here, right? So, but now in this case, as you said, it's we're just not lucky. We get this kind of like B type and a bridge down and reach the zone, which is we don't want to see. Basically, that zone could be the active buying happening. However, if it didn't reach there and then it came back, that would be a good sell, right?
Yeah. But just based on what you're drawing here, no, I wouldn't sell it either, just because I'm too far away from my release zone.
Right.
Yeah.
Right.
Yeah. If all of that is happening here like that.
Yeah.
And then okay. I'll take it.
Yeah. So in the bigger picture, we still want to sell around this area, not really down below.
No.
Right.
No.
Yeah.
Because again, this right here, it sort of trumps over these guys, right? Although this is a counter trend release, but it is a 60-minute visible counter trend release. This is a 5-minute release. So I
that's true. Yeah.
Yeah. You really want to stick with that piece up there.
Right. Okay, I understand. So then if in the other scenario, so it's more or less kind of like the same. Sorry, I was around there. Oh yeah, I don't know. Sorry, I'm having problem with my annotation. Okay, there we go. Okay, so so in this case, because we have this kind of we have all of this different setup, right? So there's there's this kill, and we have trap over there, and then we have so that's the A type. So in this kind of scenario, I think the best thing would be if we have this A type trap here, that would be ideal, right? So it pull back to here because that price is close to this zone. But the other type, like in this case, we have a B type, which is not ideal, even though it got the kill and pull back because the price point is there instead of there. Therefore, it's more risky. We probably will let this one go. If it's an A type, we probably take the trade.
Yep. Yep.
Yeah.
Yep. So besides all of that kind of trap patterns, there's still one more thing we could potentially do, right? So if volume agrees, and if we have something like this, goes above, stalls, and then then yeah, it's fine. If there's
Right.
high volume and enough data for a range, in this case, it's not a range, right? It's just 2 candles.
Yeah.
So if there's volume and there's range, then you can trade this.
Yeah. Providing here is not really huge volume, right?
Yeah.
If there's a huge volume here, we also need to stand by.
Yeah.
Okay. Thank you.
Yep. So still using traps, volume behind us, all that kind of stuff. Okay, does everyone understand this piece here? Good. Again, just to let you guys know why we are on the 5 looking for a release is because generally speaking, primary, secondary, they move quite quick. So this move here, generally, again, emphasizing on the word generally, doesn't really kill anyone because someone down below is trying to buy, and it's going to be hard to see on the 60-minute where release can be. So that's the only time we're going to use a release on the 5. Besides that, we do not use a release on the 5 to look for a level. Okay, here, when things are on, all right, after seeing primary push, these guys trying, these high volume guys trying, and then, being transferred over, then this part here is easy, right? Because here on the 60-minute, we know we have level. All we need to do is do our volume analysis of this to this, see where the high volume is, where the low volume pullback is, and then go to the 5, then look for the exact same thing. All right, now in this particular example, it's very easy to look for an entry. Right, so from this point all the way towards the high end of this, all the pullbacks are coming back to a 60-minute release zone, and towards the end we see high volume coming in. All right, I would agree if one would to say this uptrend doesn't really look that good because we do have volume here as well. So it's not the unhealthiest one in the world. It does feel healthy still. So this is the part where we generally use correlation to see if everything else seems like they're trying to turn around. So once we're back at the 60-minute release zone, again, on the 5-minute, we're looking at the same thing. Where's my last guy who started? Here. Here. It got killed. All right. What's this? Sort of like a C type. All right. Comes back towards that area. You would want to hit the cells around here. If, let's say, we do not hit the cells there, push towards the downside, we have to get in there. Yeah. So, we do have a test afterwards around this zone here. Okay, in this case, your stops doesn't really need to be above these guys, the 60-minute level. Because we have read the pullback on the 5 and waited for the turn, our stops can just be around here. Okay, yep, Maya.
Lucas, yeah, I've just got a question. I'm a bit confused. Can you just go back to the 1 hour? I just want to.
Yeah, sure.
All right. No, that's too much. Zoom out of it. Now, my first question is, okay, like that. So we were actually looking, let's make this thing thicker. Okay, we were taught like having a look at this, and then we're looking for the last guy and actually make the lower low.
Mm-hmm.
And he should be taken out for our pullback to start.
Yep.
And then we should get a trap up there to actually be interested in a sell. How can we be interested in a sell down here if this guy is not even trapped yet? Or, I mean, we already now selling on the 5 minutes, but we don't even have a trap on the 1 hour pullback yet.
Which sell? Which
what we're discussing now the whole time. I mean, we're looking at the 5 minutes, but we're not supposed to look at the 5 minutes because we didn't even get a proper pullback on the 1 hour yet.
Oh, okay. So in this case, your buyers, your so-called the pullback is actually this one here that killed this guy. So once we killed that guy, this is assuming that buyers have actually stepped in, which is this piece here.
Yeah, but that didn't happen. I mean, it wasn't
here. Is where you get.
Yeah, I mean, for me, it's just selling too late in this move. We didn't get a proper pullback. I don't know.
Oh, okay.
I'm just a bit confused. Why are we interested in selling? But because we didn't get a deep enough pullback? Because can you really say that guy's been taken out? I don't know. It's so little. Sometimes you said, no, it's not taken out really, so we can't. And even if it's been taken out, then we still need a trap from that side to be interested in this sell, which we also didn't get.
Which is this guy here, right? You're referring to?
Yeah, he's never been taken out, this buyer. Maybe, yeah, but it's so little.
Yeah.
I don't know. In the bigger picture, it just seems to me like not a logical place to sell. I might be wrong.
No, you're not wrong. If you're looking to be a little bit more strict, right, one can actually still consider this as a range, right? So if you want to be a little bit safer, then make sure price are actually holding above. Then that's fine as well. The reason why I'm considering this like that is because even though he's not technically killed, we have a little bit of volume supporting the sell side. The reason why I'm able to trust this is because these guys have a huge ton of volume, which makes this goes up like that. Although he's not really taking him out convincingly, but just because how much volume he has, it has to get people to think that buyers are back. And that's all we need, to have people thinking that the buys are back, this volume here. So that volume convinces me that, okay, people are thinking it's a buy, stops at the release zone. It should invite a lot of people to buy, which is these guys. And when they fail, although he's not taken out, we know ahead of time how people are thinking. Because of volume, they are trying to buy. If they fail to catch this, they would try to buy this, assuming that this could still go higher. Once that happens, your release happens from here. So if I do not have volumes like this, or this and this, then it's gonna be really difficult for me to consider the fact that we actually got a kill. Then it feels more like a range. Then it doesn't feel like a pullback. Does that make sense? I'm using volume to try and see if I can justify it's actually buyers or not.
Okay, it makes sense. Well, it's just not clear according to the patterns we've been up to yet that this can really work.
Yeah.
But it's okay.
Yeah. Eric?
Yeah, another way I was trying to think about this is that we have this we have this range that lasted like for about 2 days, I'd say. It's quite a long time. Then we also have volume there. So when it breach through, go up, could at this point can we already consider there's already is a buy here already? So I think the whole point of trap and everything is like really, if we want to sell, we need to have a buyer first. So in this case, it's actually quite convincing. We got a huge range, we got volume, and then we have buyer here. So therefore, when the buyer come to challenge the seller, and then the seller started to take action, in a way, I think we do have a like primary, secondary.
Yeah. The range also is another factor. The other reason why I was able to see that this could be an indication that buyers are actually coming in is, some prop guys were also thinking that I think buyers are coming back.
Yeah.
Based on the range, based on the volume.
Yeah. Okay, thank you.
So the idea of having a pullback on the technical point of view is, we want to see buyers to come in to do the sell, right? All this just gives us more money on the upside. Once they're trapped, the release will happen stronger. But the logic there is to make sure people think it's a buy, so they can add money into their positions here. So in this case, like the one you said, Eric, the range and the volume should make people think that this actually is a buy. Because I would think it's a buy as well based on this area here. Yep, that makes sense. Eric?
Yeah, thank you.
Yep, Ian?
Yeah, I have a question. You said here could be the primary. In order to be a primary, we should have a level somewhere. And I can see here a level from here to here. Can it be? Also, it is tested here, but it is at a higher level here. This could be maybe the reason to be considered the primary.
Yeah, it could be. But primary doesn't have to come from a release zone all the time. Sometimes it could stop halfway at a simple SNR.
So not from a level, not from a strong level. Can be also from one. Okay.
Yeah. Not all the time.
Okay. Another comment I have. You said that here we can consider it as a range, but we have only 3 touches, and we are here. How do you know it's a range? Maybe because this is a high level and it will come back.
No, it could be a range because, like Maya was saying, there is still a fair possibility where it's still not taken up.
Yeah.
Where it could still be in sales territory, where it's still in seller's territory. No territory has shifted yet.
That's we have 1 touch. Yeah. 2 touch. 3 touch here. How do you know it does not blast from here?
How do I know it does not blast from here going all the way back down?
Yes.
Because again, right here, we have
It's a
zone, we have
okay.
volume, right?
It's a good trap. It's a strong trap.
Yeah, yeah,
it's a very strong.
Okay, thank you very much.
yeah, no worries. So you have to open when you're looking at a analysis, especially like stuff like this where it's uncertain, then that's the point where you have to piece everything together. Where it could be a range, right? So if it's a range, then I gotta start thinking how a range would happen in this case. Then you gotta start thinking, okay, maybe if it's not a range, what are all these telling me? What's all this telling me? When this thing starts stopping around this zone here, what is it telling me? Maybe it's not a range. Maybe he actually got taken out. Maybe, we wouldn't really know at that point of time.
Okay.
So again, the easiest way to do it is read it step by step. Not
Volume
reading
on price action. Okay.
Yeah, not reading. This is not the right way to read, right? This is the wrong way to read. Sales are coming down. We start the range here, and then we go up, and then from there we come back to SNR, and then we test. That's not really reading it, right? That's just looking at the charts and saying what's happening. You gotta really see, okay, sales are coming down with a little bit of volume at this point in time. Stops going lower. What does that mean? Is it buyers coming in, or are there sellers still selling down there? Hold on, sales got trapped temporarily. Am I in a range, or are these guys taken out? That's how you want to read it step by step. Then you'll find the answer a little bit easier.
Yeah, I get the logic why this high volume came in, but the way I see it is that it's the highest volume throughout this sell, so it would still be okay to take that sell based on the logic, or no?
Yeah, if you're saying the fact that we're in a downtrend, at this point in time, there could be a possibility that it could be the end of the downtrend, then leaning on the sidelines, could be the right answer as well. Yeah. Maya, go ahead.
Oh no, sorry, it's still old end.
Oh, okay. No worries. But does that answer your question? I understand this pullback based on chart alone might be difficult to consider as a pullback.
It answers my question the way you read it, but it was not a 65-minute trade. That was more a 5-minute trade, am I correct?
Which part? Here, it's the 5, you have to read the release. Here is 5 as well, you have to read the release.
Yes, but that was more using the 5-minute as our trading time frame then.
Yeah.
Not the 60.
No.
Exactly, because if it was a 60 time frame trade, then I wouldn't have taken this trade. But if you were just looking at the 5-minute, then yes, makes sense.
Yeah. Well, we're always going to be trading on the 5.
Okay, so what do we use the 60 for then?
To mark this one here, secondary. Most of the time you're not able to mark the release on the 60.
Okay, I'm sure I'll get around when we do more examples.
Yeah. We will do more examples. So try and watch this recording one more time, and then again we have a few more weeks to go.
Okay.
Yeah. But this piece here, you understand, right? How we mark this and how it would sell on the 5.
Yes, now I get that. I was just a bit confused because on the 60 we didn't even add a pattern yet.
Yeah. All right. We'll do more examples. Don't worry. Laila, go ahead.
I think I understand what Maya says. Maya, I think that you see this as a pullback for a bigger trend. Maybe it comes from here, and you're talking about this move, and you're waiting for or this is maybe the 4 hour, and this is with the 1 hour, and you're waiting for it to come up to here to sell again.
Yeah, if we are using the whiteboard kind of view, yeah, it would be this downtrend and then pull back to sell. That's basically it. Yep. It's just this looks different.
Yeah, this is where we must think, okay, this is our seller and our immediate seller. So when it comes up to here, we can at least take it to take the primary to here, because we're seeing a lot of big level here with volume. And then maybe be very careful, because this can belong to a bigger boy.
This buy here, be careful, because it can belong to
the bigger boy.
Yeah.
Okay.
But this piece here, although the right word is be careful, but I would recommend not trading this piece too much. Because sometimes we'll see a pullback where it doesn't just stop. Let's say if this is a release zone, doesn't just stop here like this to go up. You know how we have the C type, where it just crash like that?
Yeah.
No,
because of course, because you are still within this seller here, so you wouldn't take the buy here yet until it resolves maybe up and then.
No. So even if we have taken him out, let's say here, this buy would still be very tricky to do. Because just because we're in a downtrend.
Yeah, but if we are in the uptrend from the 4 hours, this would be a level for the 4 hour to take it up.
It might.
I'm thinking like.
Yeah, it might, but it might take a few tries. So it might fail here, and then from there it might go from there, because it's 4 hour. Then it might take a longer time.
Yeah. So So you concentrate on what happens right now, and then when the level changes, then you think of the bigger picture.
Yeah. So concentrate on what you are able to read and see on the 60 first.
Yeah.
Okay. To do this, we're gonna try to do that. Look into that next week.
Yeah. You have to get out of that the very big range before doing that.
Yeah.
So.
Yeah.
Okay.
Yep. Who was speaking just now? Ian?
Yeah. Coming to Maya's question, we use the 60 to see the levels, and we use the 5 trading time frame to enter, to use the stop loss on 5, but the exit on 60.
Okay. So try and think about it. Right? Say we're right here. Okay. Let's do this like that. Goes up. All right, you have a level. Say if you're trying to sell this, where would your exit be?
For primary, here.
Yeah, so that's it. Here, right? So in this case, the way you read this, you look at this area on your 60 minute. Right? You look at this on your 60, you look at this on your 60, but you gauge, and then you look at the overall volume on the 60 to see how healthy the trend is. Is it healthy, unhealthy, that kind of thing? And then you get your entry here on the 5. As it slows down, on your 5, you exit here.
Mm-hmm.
All right. Here is the secondary, and then here is your cheese. So this piece, again, same thing, 60-minute level, which is here.
Yeah.
Okay. You gauge the pullback on your 5 minute, stops when you see your 5-minute last guy who started got killed. Then you write the cells down to the recent low. If there's nothing, no volume or anything down here, you can write it down towards this area here.
Okay, so here we have two TPs. First is here, and the other one is here. Here.
Yeah, based on this, yeah.
And during the trade, we can see how strong this is coming down. We analyze the or not.
Yep. You see how far and how strong it can go.
Okay, thank you very much.
Yeah, no worries.
Lucas, can we maybe do our next example with the 60 and the 5 minutes next to each other, so that we can see the drawings on both? It might make a bit more sense.
Sure. So I'll draw the 5 here, yeah?
No, I think on the real chart.
Okay.
If we can put the 5 and the 16 next to each other so that we can see.
Okay.
What's the whole picture?
Sure. I'll do it on top of each other like that. Okay. What am I doing? Census. Okay. Go down to the 5. 2nd December. All right. Okay. So, does everyone see it? Is it too small, too big, or is it okay? Okay, right. So here, this piece, okay, this is primary. All right, primary. Sometimes it comes from a level, sometimes it doesn't. In this case, it's sort of like a level here on the 60. All right. The way we trade a primary, same thing. Isolate a level. If there's a level, isolate a release zone. In this case, it would be here. Here, right? So that would be, I'm just marking based on where the line is here. Okay, goes up.
I think it should be easier if you just sync the time.
Yeah.
And the drawings.
Here. Yep.
And the drawings, then we can see where it is.
Drawings.
Yeah.
All right, thanks. Yeah, I rarely use this. All right, so same area. Okay. Zoom in. See how this is the last guy? If that's not the last guy, we could say here. But anyway, the area where it turned around was how we are taught the first few lessons. See where the trend ends. The trend ends when the buys turn into sells here. So whether or not we get an entry, that's something else. The whole point is from this point here, we push down primary. If that's a real primary cannot go far because someone below here is trying to release. All right, in that case, would be this zone here where the last attempt was. So it releases from there. Okay, this is the part where, this is the only part where we are using a 5-minute trap to sell. This is the secondary part. Okay, which is this zone here. Okay, so P secondary is this zone here, and then cheese. All right. So where secondary can be sold, we are still doing the exact same thing, marking where the buys are coming in. Last guy who started would be around here towards the buy side. All right. Wait for him to be taken out and then sell. In this case, it's hard to sell because when he's taken out, he's already at the bottom. So it's way too difficult to sell. The easiest way to sell this is for this piece to go up a few more legs, then sell it out from the top. That's your secondary. Okay, so again, secondary is the only time where we're using a 5-minute release zone and gauging the 5-minute. We're not using a 60-minute release zone. All right, so that part we're gonna do. It might be confusing, but we're gonna do more practice over this. But what comes afterwards is easy, which is when on the 60-minute, when we actually resolve back down. Here again, we have buyers that tried. Here, these guys that tried. When they all got killed and pushed towards the downside, they would want to release around the same zone. There. And that would be here. All right, so this piece, again, doing the same thing, looking at the 5-minute pullback. Where's my last guy who started to push towards the upside? This guy here. Okay, let me zoom in a little bit. Here, all right? So coming back towards the 60-minute release zone, wait for him to be killed. Is he killed here? If you're aggressive and think that you have correlation and volume behind you, yeah, I guess you can sell here. Otherwise, waiting for the entire thing to get killed, selling on the retest around area sectors, which would be around here. Okay, so once more, this one, we generally look at 60 to find a level, 5 to gauge the pullback towards the 60-minute level to release. The cheese area here, so-called cheese area, again, look for a 60-minute level, gauge the 5-minute for price to turn and release. Secondary, sometimes it might be tricky because like in this case, we are not able to see anything at all on a 60-minute time frame. Then it's sort of like a 5, right? Looking at a trap on the 5, release on the 5, looking for the pullback towards that release on the 5. So here, this release zone here, it's not visible at all on the 60-minute. It's only visible on the 5.
So from what I understand, even though the 60s are big boy, in this case, the story that's playing out is our trading time frame. So for the primary, secondary, the 5 would be the precision. And then once the cheese plays out, the 60 is a big boy again. So the 5 would be the trading time frame.
Sort of, yeah. Yeah.
All right.
Yeah. Yeah.
So how often do we get a trade like that that doesn't appear on the 60 there?
That doesn't what?
I mean, since we can't find since we have to go down to the trade time frame for the primary and secondary. So how often do you think we get a trade like that?
Okay. Where you find a primary is generally where you find a level on the 60. So you don't really need to go down to a 5-minute to look for where a primary can react. You only go down to your 5-minute once you know you have a level to work off. The same goes for this piece here. You do not really need to stay on the 5 at all. You only go to the 5 once you have identified a level on the 60. And how often it occurs. Sometimes 3 times a week, sometimes none a week, sometimes 4 to 5 times a week. It all depends on, which lake we are in. Right. Maya, is this clearer for you now to be able to see which area it coincides with?
I think it makes much more sense for me if I can see them both together and which time frame we will use for what, then it makes a bit more sense for me.
Yeah, great. Yeah. Yep, Laila. I'm not sure if Laila, you raised your hand from before or just got your hand raised. Okay. Before we wrap things up, again, try and look for older traits and see which area it is from. And for traps that doesn't work, see if, they have situations like this before, because this is a trap as well, right? This one here. This one worked temporarily and then fails. Right, try and look for older traits and see what makes sense and what doesn't. Then we can talk more about it tomorrow.
Lucas, I was muted. I'm sorry.
Oh, okay.
Last question.
Yeah.
Can we go to the 5 to look at the primary?
Yep.
There, yeah. You said that the guy who started it is this one. He got killed here. But I'm thinking, can't we say that from the upper side of the range, this is the guy who started it. It was killed already here, and this was the try.
Yeah, it's a good one. It's hard for me to say that unless I have super high volume to back me up on that on that, because it's so small. So I would say he's still alive. If let's say you have high volume here on this bar, goes up, again high volume all around this zone here, and then volume all transfers down, then you can try and sell these areas here. But yeah, I think in this scenario I wouldn't be able to sell this, because by the time it got killed, it just never really pulled back.
But wouldn't it be count like a try from the seller, because it is on the upper side of the range, and then all the moves are just like this size, not bigger than this one. So maybe this could count like another move, try for the seller to take it down, because all the moves are like this.
You can try and do it that way. I'm just a little bit more conservative.
Okay.
Yeah. To reduce the margin of error, you just have to make sure this area here is coming off a very good 60-minute release zone. So then you have to ask yourself, is this very, very good? In this case, I'm not sure, because it feels like we have pulled back to it once, we have pulled back to it, the same kind of zone again here. And this few bars looks very strong. So
okay.
Yeah.
Yeah, got it. Okay, thanks.
No worries.
Lucas, can you just one more time on the 60-minute, just explain what made you interested in this cell?
Okay.
Without looking at the 5 minutes, what was your reasoning?
Okay. So to look for the whole goal on a 60-minute is look for a level, right? And then to have a level, we need someone to be trapped, right? In this case, the technical analysis isn't really the kind of pattern we have tried to we have learned so far, but the idea and the logic still remains the same. So if I want to sell, I need buyers to be trapped. Okay, so that's something to keep in mind of. So when we look at this downtrend like that, when we push down, sure, downtrend, lower lows, lower highs, pull back towards the same area again, sell, right? When it's sold, has super high volume, not going anywhere, and then resume towards the upside. At this point, like you, I am also not sure if we actually took him out because we are just a few pips higher than him, just based on the price action.
Okay, can I quickly come in here? That last guy that you said that got taken out, that's not the last guy that started it because there's no lower low. So how can we use that guy for being taken out?
These guys?
No, not that one. I mean, yeah, that one is the last guy who started it actually. But as you explained now, the one there in the middle at the bottom, just draw there. This guy, you said he tried and he was taken out, but that's fine. But this guy, as we said earlier, I'm not convinced that he's been taken out. But okay, you can carry on.
Yeah. So this is the last guy who started, right? This is his last attempt for sell, right? So his attempt failed to make lower lows, and this last guy that made a lower low got killed. At this point, exactly like what you were saying, I'm not sure if just based on these few candles, we actually made a higher high. But what we are sure of is the volume that's showing on the charts. These volumes is where we ask who's selling down there? These guys, right? So if these guys that were selling here got pushed towards the upside, we have two things working for us. The first thing is this could be a range. In a range with volume, we will see a release. So the idea is someone is trapped, a buy should come in just based on the fact that it's a range and there would be a release. So this move and this range and this volume is telling me that we will see buyers trying. Regardless of how strong we killed this guy, or even if it's a kill or not. Regardless of that, someone's gonna try. Yeah? So this logic here brings buyers in. Again, to confirm the logic of bringing buyers in, just look at the volume here.
Okay, so you're actually looking for a trap on the opposite side, on the 60-minute, and then you go down to the 5-minute to see where they fell and to get in for a sell.
Yeah, here or here.
Yes.
Yeah.
Okay.
Does that click a little bit for you, Maya?
Yeah, it's. I was just thinking we're looking for. Yeah, I just had the picture a bit different in my mind than the way you explained, but it's. I've got it now.
Okay. Yeah, you really have to try and see what these could mean for other retail traders, because in a downtrend, you see super high volume. The first thing that people would think about is it's the end of the downtrend. Buyers would come in, so it makes sense for us to have buyers trying up here. This is one reason. The other reason is the range. So that kind of argument just makes the fact that maybe I think we actually, even on a technical point of view, maybe around here, that we actually made higher highs and killed the sellers.
Okay, and then on the other question is on that last guy who started it, volume was quite high. Doesn't that make you a bit scared of selling this then?
Which guy? This guy?
Yeah.
Yeah. So when he got pushed down, right? When we go up, this cell here is the one that you do not really want to have too much conviction, not because of him, okay? Because of him. Because these guys have volume. So this release might push up even further. But when we went back down, it all just means that he's still intact. So this cell here, yeah, this would be a risky cell, but not because of this, because of these high volume guys. Does that make sense?
Yes, thanks.
Yeah. Yeah. I'm gonna do more practice. Don't worry about it. I think I saw a few hand raising just now.
You just already answered the question.
Is it about this guy?
Yeah, I was just looking at if we still on the 60, so because I was looking for the best part that if we read the 60 correctly, where to take the trade, which is on the cheese tray right here. Because when this one comes down, we can expect reaction from here. So they try a couple of times, then the volume comes from the bottom. Then this guy took it out. So I think most buyers will try to look for the next area, right, to eat the buy, but it comes right back down. That means that our trainers probably resume.
Yep.
Then we could just watch this flow. Then we could take it down.
Yep.
Then if you can to take this on base, we could just go down. If you're trying to use the volume with the way this one comes up and this one, based on technical analysis, we can go down to 5 or trade it time frame to get a possible entry here instead of here.
Yeah, you can do this. Yeah. Just in this case, you wouldn't, because even here, you have high volume. So on the 5, when you're looking at the overall pullback, right, your overall volume is pretty much at the bottom, saying that this uptrend is still healthy.
That means risky to sell.
Yeah, this piece would be risky because of this and this. Hence, you see this piece still pushing hard before resuming down.
How would you know where your next level is once this cheese takes off?
If I'm here?
Yeah.
I'll just get out here.
Okay.
Yeah. So it's either taking it to the next release zone or the next recent low, recent highs. That's all. Yeah. Any other questions? All good. Yeah, try to look at older charts or watch this recording one more time. We're gonna do more practice on this anyway for the next few days. Sounds good. Yeah. All right. Let's call it a day here. Meet back here tomorrow, same place, same time.
I guess.
Thank you. Bye.
Thank you.
Thanks,
Bye.
Lucas.
Thank you.
Bye.
Bye.
Bye. See you guys.